a lot of times, the biggest complaint I hear from investors is, well, where are the use cases? I don't see it. And the fact of the matter is, we are lucky to live in the US where things work. Um, the truth is, in many other parts of the world, they don't work. And that's where you see crypto adoption picking up very, very significantly.
Welcome to On the Tape. Guy Adami. I'm always joined by the great Kaitlin Malin, the COO of iConnections. Today, Kaitlin, we have the opportunity, and I'm really excited about this. We're going to speak to Chris Rhine. He's the head of liquid active strategies at Galaxy Digital. Chris, how are you?
Very good. Thanks for having me on.
It's great to have you on. And what we like to do is sort of, if you can give us a few minutes, just your background, sort of how you got to Galaxy, what makes you interesting, all those types of things.
Sure. I started my career at BlackRock out of undergrad. That was back in 1999 as an intern when there were, 700 employees, I believe. And I actually started more on the tech and programming side. I did that for a few years and then ended up working with an investment team there. And I was a hobbyist investor at that point. They actually brought me on as an analyst. And for the next 8 years, I worked as an analyst on their global opportunities team, which peaked at about 18 billion in assets and had a number of mandates, international, global, and US based. In 2012, I took a new role at a niche real assets manager called Cohen Steers. At Cohen Steers, I founded and headed up the global natural resources team. For an interim period until we shut it down, ran the large cap team, and then headed up their strategic equities team, which had niche portfolios like digital opportunities, global logistics, and at the end was also co-PM of the listed infrastructure team. I always had a bit of an interest in crypto because it kind of brought the finance aspect and the programming aspect into like one perfect vehicle, and had been a hobbyist investor. That's kind of what led me to crypto and what led me to Galaxy. I had hoped, I actually was thinking of trying to figure out how to get crypto into Cohen Steers. It's just, it wasn't really core to the business there. At Galaxy, crypto is pretty much all we do. So in the beginning of 2022, I joined here and I'm working to launch a number of liquid strategies across crypto, not just crypto tokens, but also working in crypto equities and a couple things that are cross asset as well.
There are a lot of thematic things about crypto, but there are also sort of trends that happen within the themes. And I think over the last couple months, we've seen a lot of sort of these trends that are taking place within the overarching theme. So maybe you could speak to some of the trends you're seeing.
I mean, the biggest trend this year is the ETFs. Seeing these come into the market and really open up a door for investors to get easy access. To me, this is always a very important part of crypto. In the last cycle, it was really the exchanges which helped open up those doors as people got more comfortable opening Kraken accounts and Coinbase accounts and Gemini accounts. The easier it is for an investor to get access to crypto and the safer it feels, the more likely they are to do that. So being able to access crypto through your brokerage account now is really a game changer for a number of investors that weren't willing to kind of take a different route or do things on chain and have to open a wallet and remember keys. The other thing we're seeing really, and this is probably more recently, is what seems like a bit of an easing on the regulatory front. And, it's no surprise probably to people listening. The regulators and even the current administration has been pretty hostile towards crypto. Last year in the spring, we saw the SEC just start lobbying out a number of lawsuits against a number of companies. And these companies have been trying to fight back. They've been committing millions of dollars in lawyer fees, really trying to prove the case that, it's not about them not abiding by the rules. It's the fact that the rule set doesn't exist for this asset class. So Seeing some of the movements in Congress on some recent bills, even hearing this as a bit of a political agenda as it pertains to the election is a big thematic as well. And it's going to be really interesting how this continues to play out into the end of the year. I think, the last thing I would talk about in terms of themes are just a big divergence between, what we see in some of the larger cap coins versus some of the more speculative coins. And I'm going to take meme coins out of that. That's its own theme. But, earlier this year, we did have a pretty nice rally in all coins. And this really started at the fourth quarter of last year. But there's definitely been more of a persistence to that performance in the larger, more well-known coins. Think of it, Bitcoin, Ethereum, Solana. And some of the smaller cap, less well-known, less, traffic coins, you're seeing a lot more selling pressure there. And there's a number of crypto coins which are down, 20 to 50% depending on it, even though you still have Bitcoin on a year-to-date basis, which are up, over 50% at this point. Solana's still up quite significantly. So you're seeing much more differentiation in terms of performance in the market.
Why don't we circle back to the crypto ETFs? And before we do, first, thank you, Chris. Thank you to Galaxy. Galaxy's been a great sponsor and supporter of the iConnections Global Alts events and to iConnections more broadly. So super excited to be here chatting with you. With the crypto ETFs, I think, and just to use Global Alts as an example, we look at the institutional asset class and the interest in digital assets. From 22, we had digital assets funds represented about 6% of the entire conference base, and then 8% of all of the meetings that took place there. And Global Alts 22, there was 8,000 meetings this last year, up to 15,000. 23, it changed. We represented about 4% of the funds, still about 6% of the meetings. So still kind of punching above their weight in terms of the meeting and the interest in that allocators were giving them. But then in 24, last year, earlier this year, I should say, it was 2% of all the funds that attended and only 4% of total meetings. So still sort of punching above the weight in terms of who they're representing, but this waning interest. So I'm curious if crypto ETFs have helped to create somewhat of a resurgence for institutional interest in cryptocurrencies, and if you've noticed that or are picking up on that at Galaxy.
I think really the cause for that was a lot of the chaos we saw in 2022 with a number of companies going bankrupt, and then of course culminating with the complete bankruptcy of FTX and just a significant impact that had on the market. I would say that prior to that, institutions had really started to warm up to crypto, and after that, it was in the doghouse, and that's why you kind of saw each year that interest has definitely waned. But in our conversations with institutions, the ETFs have definitely helped. Crypto is no longer a curse word around kind of the investment table. It's catching people's eyes. And there's more and more meetings that we're taking from people that we haven't spoken to since 2022, or we haven't spoken to since 2023, which is interesting. They want to know what's going on as well. They want to know, what's the likelihood that some of this regulation changes does happen? What's the likelihood that, other types of agenda items actually get fulfilled? And the more we hear Congress talk about this, because Congress didn't have time for crypto before, it was so far down on their agenda list, they didn't really care about it. But now it's kind of become front and center. And the more that investors are hearing about it from politicians, the more that I think they're coming around to thinking there is a decent chance that this could actually be an asset class that is regulated and is investable. So we need to start doing the homework, and we're starting to see that today.
In terms of doing the homework, how are they looking at the asset class in terms of risk assessment and how it would fit into their portfolio?
Yeah, so I think a lot of the early institutional investors really had a preference for venture. Venture investment, it's pretty, similar across different asset classes in how it's executed. Whether it's a seed stage or a Series A or B, you're taking an equity stake in a company, and the volatility of that tends to be significantly less than what you see on the liquid side. So from a risk perspective, I think there had been more comfort moving into venture. Venture has pros and cons. It has a substantial lockup, and the inability to really take advantage of some of the significant moves that we see in crypto, both to the upside and downside. More recently, what we've been hearing is that investors that have invested in venture, they're more looking towards liquid. They're looking at the ETFs. They're looking at certain actively managed funds. They also are looking at funds where they're able to take more of a long short approach and really dampen down the volatility. It's difficult to go to. I'm sure it's difficult to go to your CIO and recommend an ETF that still has a 60 vol to it, and get away with that without a couple screaming matches. But I think there are other asset managers out there that are trying to be creative in ways that you can create a liquid portfolio, but you can try to mitigate some of that vol impact.
Chris, off the beaten path, the last couple of weeks, we've seen some really interesting developments geopolitically. I mean, most recently, this whole CrowdStrike situation that apparently is still having an impact on some of these airlines and some of travel. And oddly enough, although it actually does make a little sense, all roads sort of wind up back to crypto. So speak to, I guess, adoption and then sort of the events of the world sort of lending themselves to institutional adoption and people sort of, I guess, looking at crypto through a different lens.
Yeah, I think that's one of the key tenets of crypto is, there are these centralized entities, software companies, and they really control the software stack. They control what goes in and what goes out. And unfortunately, they control when it works and when it doesn't. Crypto, as you know, is much more of a decentralized approach where if one of the validators go down, there's still many other validators that can continue validating transactions, and it's considered a trustless network. You don't have to trust that a certain validator is doing the right thing, because if it's not, it'll be slashed if this is like a proof of stake network. I think in terms of some of the other things, people are looking at AI right now, and they're trying to think, well, how can you authenticate what is real and what isn't? And people have been trying to figure out how crypto can play a way to really solve that problem, given its trustless nature as well. As we continue to see new technologies as well, I think crypto is going to be seen as, would it help to improve this technology? Would it help to authenticate this technology? Or would it help to run this, so that you're not just relying on a single source, that if there are issues, we have no control over that.
Do you have an example of even in blockchain and how rapidly that's progressing that seems really promising, or something that seems to resonate with those that are more distrustful and unsure?
Well, I think, where we see a lot happening right now is in the payment space. And, I should caveat this, that many of the major banks are looking at using crypto and payments as well. Not too long ago, I spoke to the individuals at Citi who are building out a crypto payments rail. And, they're doing this between their New York office and Singapore in kind of a limited beta test, and they have to do it on private networks right now, as the regulators won't let them do this on public networks. But they're kind of building out the proof of concept, and they're building out a use case that exists there. And what this really allows for is just instantaneous settlement. You don't have to wait, a business day. You don't have to send a wire where the bank's like, are you sure you want to send this? Because if it doesn't end up there, we're not sure where it might end up, and it will be very hard to recover that. So the payment space continues to see just a ton of activity there. And I think it's reassuring to see that it's not just, new companies that are looking at payments, but also some of the larger banks that have other payment rails, but are trying to see if crypto can do that better.
On the regulatory front, what are you at Galaxy looking for that's sort of the next step or the next piece of news or change that'll change your position or make you feel like it's moving in a positive trajectory?
Yeah, so the latest one that's currently sitting with the Senate is Fit 21. It passed the House. It had what turned out to be bipartisan support. It's sitting with the Senate. it remains to be seen if anything gets done this year, just given that we are coming into elections, and I'm sure their time is being focused elsewhere. But it would be great to see the Senate, who will probably put their fingers on it and send it back to the House, but it would great to see momentum on that. I think, when we kind of look at other items, I would love to see a couple of these companies that have filed S1s go public. The SEC has definitely been a roadblock to companies going public. We've been trying to uplist Galaxy Digital on the NASDAQ for over 3 years now, and have been doing back and forth with questions with the SEC. And it's just been an exceptionally difficult process for a company that's already publicly listed in the TSX in Canada. So there are a number of things that we could kind of watch that would kind of show that there's a bit of thawing on the regulatory side. And hopefully we start to see some of these things.
What should like those that aren't following the market as closely be looking for in headlines or in a policy that comes out more publicly?
The other things I'd be watching, does the SEC have to drop some of its cases with Coinbase? XRP, the Ripple token, has been seeing a bit of a rally recently, and there's some speculation that there could be, some positive developments there relating to the SEC case against them. So that one seems more near term. Coinbase continues to fight the fight, and we hope they definitely come out winning. They're a great partner, and they're a great asset in the ecosystem. So I'd be watching kind of those cases too. And I'd just like to see the SEC continue to thaw out a bit. And, hopefully if Gensler starts worrying about his job, he'll start allowing this and say, see, I did kind of allow these things to happen.
Chris, this next question is going to sort of focus on central banks, and they're obviously the importance of them in the market. And this is what I believe the crypto and Bitcoin was born out of. And I'm not suggesting I'm right, but it feels to me crypto was born out of the financial crisis as a hedge against sort of central banks run amok, fiat currency, and those types of things. And to a certain extent, you can sort of overlay the price movement, specifically with Bitcoin, as to how the U.S. Federal Reserve has acted. I mean, I don't think it's coincidence that the first time Bitcoin topped out, I think north of 60,000, was the fall of 2021 into obviously the winter of 2022, when the Fed signaled they're going to start to raise rates. So I look at it, the importance of central banks, their ability to sort of control the narrative. That to me is sort of in large part what Bitcoin and price movement is predicated on. How close am I? And do you look at it in a similar fashion?
I think that's kind of the prevailing wisdom right now, given that Bitcoin is a fixed supply, asset. To your point, central banks can print currency as fast and as much as they want, and it's really just technically a devaluation of an asset holder of that currency. And we've seen massive devaluation in countries outside of the U.S. and Argentina and Turkey, when you look at kind of what's happened in those economies. And the beauty of Bitcoin is it's not just a U.S. investment asset like, U.S. stocks or something like that. It's a global investment class. So Bitcoin is a way for users in, or individuals in countries that can use an asset to really escape kind of that financial repression or financial regime that the central banks are setting. And as long as the US dollar continues to be, kind of the world currency, what people are using, pinning yourself to an asset that's pinned to the dollar when your local currency is depreciating by 40% a year is a really good way to preserve wealth. No longer do you have to buy hard assets to preserve wealth, because they should technically go up with the currency as well. But you can actually find an asset that's easily accessible, that's going to hold on to that. So I think about it kind of as not just, the Federal Reserve, which clearly also drives the price of crypto and Bitcoin, but, global central banks.
Can you comment as well just on the size of the global market and the right way to think about the size and expectations for growth, I would say, over the next 5-10 years for the crypto market?
Yeah. So What we see, and especially in terms of crypto adoption, is that the Asia Pacific region has been much, much faster in adopting crypto. And in some countries like Korea, crypto is technology. It's kind of what they are, using and utilizing it as where new college grads want to work and start a career. In South Korea, definitely you see, ownership of crypto quite high as well. But it's not just in random countries. Like crypto is a way for, you know, firms and venture capital to be done in a completely different way than it's done in the West. We have very, very robust venture capital markets where I can start a software company, I can get seed capital, and then I can do Series A, and I can raise funds for that. If I'm in, Vietnam, those markets don't exist. And if they do, it's for the very, very wealthy or the very, very select. Now I can start creating some software. I can actually issue a token or token warrants. I can get capital in to fund myself. I can continue building out that software. And that's kind of what I see as a new way of venture capital for regions and individuals in regions where you don't have the depth of markets that we do and the robustness of markets. So it's a whole new way of thinking about developing software and developing platforms and programs than we're very used to in the West. And I think, just to wrap that thought up, a lot of times, the biggest complaint I hear from investors is, well, where are the use cases? I don't see it. And the fact of the matter is, we are lucky to live in the US where things work. The truth is, in many other parts of the world, they don't work. And that's where you see crypto adoption picking up very, very significantly.
Risk management in sort of the old world in terms of commodities or currencies. I mean, it's pretty straightforward stuff. My sense is risk management in the crypto space is a couple. I'm sure there's some turns and some things that people don't think about. Can you speak to sort of the risk management that you implement?
Yes. So I get a daily risk report, just like I did when I was running equity portfolios. We look at, the correlations of the assets we own, the volatility of those assets. We're looking at, stress tests. We're trying to determine, what the risk of our portfolio is. And, I don't think that investors want us taking a 120 vol portfolio and telling them that this is a risk averse portfolio. So in crypto, particularly in the US, finding ways to hedge can be difficult if you're a registered investment advisor. We don't have access to the offshore perps trading exchanges that allow you to take those short positions to really kind of hedge portfolios. Those are for the funds offshore. But what is good is that, many of us can use options on the CME. So we do have, futures and options on Bitcoin and Ether. We now have the ETFs. Hopefully we start seeing a robust options market on the spot ETFs developing in the not too distant future. So that's a way where we can, purchase put options to really help offset some of that downside risk. And really, cash continues to be your friend. When things are getting a little bit mucky, many crypto funds have a much wider band of cash allowance than what you would see in a traditional equity fund or a traditional mutual fund, because taking that risk down just requires you to sell quite a bit more. It's activities like November of 22 with FTX, where you wanted to use that cash buffer and really take cash down before, everything started to collapse.
I'm curious, and from your vantage point, the conversations you've been a part of, particularly with all asset allocators in the alternative space, how they're trying to bucket this within their portfolio, and whether that changes. If you're talking to an endowment, sure, they have a longer horizon, but they're also dealing with speculative boards who may not fully understand the concept versus perhaps a family office that has more flexibility, but just a smaller portfolio overall. So is there anything you're seeing there that's starting to emerge as a trend within the alts world?
Yes, so this has been one of the reasons that I think investment into liquid products has really lagged, because of this whole question of, where do I bucket it? Do I bucket it in my hedge fund bucket if it's a long only crypto strategy? But all of the volatility metrics of all of the other hedge funds are going to look very different than this one. And the performance variances can be very significantly up and down, which are going to be different from traditional hedge funds as well. And then there's some that say, well, maybe I should put it into my growth equities or maybe my small cap tech bucket, where you do have a little bit more volatility and you've got a lot more potential growth. Personally, I think, what we need to do is just create a new bucket, but I don't think we're going to do that until regulators actually finally recognize crypto as its own asset class. And that bucket's not going to be huge. Maybe it's, 100 or 200 basis points. But once it has its own bucket and once you can benchmark that bucket, I think it'll be a lot easier for those institutions that have this, this program of, making sure everything's in these buckets and that they can be measured, and the performance can be, differentiated. That's been one of the big roadblocks. And once that actually is solved, I think it might make kind of the interest in owning some of these passive ETFs or owning some of these liquid funds a little bit easier.
I find myself sometimes watching things that I think I have a modicum of knowledge in. And when I hear people opining, there are times when I want to throw something against the TV screen. So I set that up by asking you, I'm sure you watch all the business channels, and I'm sure there are times when people are talking about crypto where you're screaming, you're missing the bigger picture, or why aren't you talking about this? What are people not seeing that you're seeing in the crypto space?
So I think they're not seeing just a significant, active developer base, which continues to try to solve problems. And, where we started in the internet didn't just create an internet overnight. And the way that the internet started, it was never envisioned to be where it is today. Crypto is going through the same growing pains where, you've got these very high expectations. And then you have this realization that it just takes time to build all this stuff. And because, regulations have been so strict in the US, what we've seen is a lot of developers have moved to other regions and other locations. And there are programs and protocols and applications where they do not allow US users. They're only for non-US users because of those restrictions. So where I think, investors should be focusing and looking at is just the amount of really cool new products. And I guess because we have a venture team here and I get to see a lot of these and we talk through them, there's a lot going on under the hood that you don't see in a token market or that isn't going to make the front page of the Wall Street Journal. But it's showing just this strong developer community that continues to think through problems and continue to think through solutions and how to build that. And we're kind of on that cusp of it really starting to kind of turn up. And we have to thank just the millions of dollars of venture capital that was committed back in 2021 and even early 2022. And we're starting to see the fruits of that come through as we exit 2024 and into 25, as these dev teams have had now 3 years to start actually creating a product that looks more like a product that people want to use.
Super exciting times. Lots for us to be tracking and watching. Chris, thank you so much for being here. We really enjoyed the conversation. We look forward to having Galaxy here again for Global Alts in January, and I'm sure you'll be up there on stage. So thank you and enjoy the rest of your day.
Thanks, guys. Appreciate it. Take care.